What's the most important resource that you have? If you really thought about this deeply, I think you'd come to the same conclusion that Joey and I did. It's time. In our newest book, What's Without Wall Street, the 3 Steps to Financial Freedom Through Passive Income, we talk about how are we tracking that time? What is the thing that we can do to get more of that time back?
That's right. If you've ever been listening to our podcast and thought, man, it would be amazing if I could take all the things that you guys have learned over the last 10 years and just summarize them, put them in some way to easily digest them and take action, that's what this book is all about. You're not going to want to miss it. Go to wealthwithoutwallstreet.com/new book and get your copy today.
All right, Stallion, tell me one way that we can implement this in our own personal lives and give us maybe something that we have not even considered of ways to win.
Well, if you think about it for just a second, I mean, cash is king. We're going to apply it first personally, then into business and investing. But I just remember our mortgage days, and people had to qualify for a mortgage by having reserves. What I mean by that is, let's say you're trying to qualify for like a $3,000 a month mortgage. They want to see about 6 months of that mortgage payment in an account that is not being touched. That's reserve money, right? If you don't have that, you don't qualify. And now if you try to buy investment properties, it's even more than that, because now you have to show reserves for your primary and that investment home. So cash is king, even when you're trying to qualify for someone else's money.
Hey, where were the people you saw thousands of people's personal financial statements in the mortgage business. Where were most people keeping cash?
Well, I'll say sadly, most of it was in 401ks and IRAs of any amount. But you know what was interesting, and we've probably talked about this before, whenever I was qualifying somebody, I could only use about 60% of the balance of that 401k as quote unquote reserves. You have any reason why?
Well, I'm interested as to the fact that they would be able to give them 60% of a 401k because they couldn't even touch it, right?
Yeah, I think they just wanted to make sure that there was something there. But the interesting part was, if you were talking about cash value life insurance, they could use 100%. And that's because there's no volatility in that compared to 401k or IRAs. Those always had to be considered.
I would be interested, Stallion, if those things have changed. I know you're old, right? You're old dog when it comes to the mortgage side. You've been out of the mortgage industry since what year?
2014.
So things have changed over the last 10 years. One of the major things that's changed in the last 10 years as it relates to 401ks and IRAs is that they used to have what was called an in-service withdrawal option, meaning that most of the people who had 401ks had the ability actually to go to their provider and be able to withdraw money, not with the penalty and everything else paying the tax, but they had an option. They could even roll it into an IRA and do what they wanted to with it. But those rules changed. And I'm wondering how many of those plans that existed then maybe had that option. That's why the bank did it. We should probably ask that question to a mortgage person, if they would even still give credit to a 401k, given that unless you're over the age of 59 and a half or you're no longer at work with the company, if they would even consider those dollars a reserve anymore. What's your thoughts on that?
I think that nothing has changed that drastically, because even when I was doing them, there wasn't access. I mean, if you remember, I funded one of my early policies with a loan from my 401k because I couldn't get access any other way, but they still would have given me credit as that being a reserve.
What are your life insurance policies?
No, the 401k at the time.
Okay. You said you funded one of your policies, one of your life insurance policies too, bit.
Yes.
All right. Let's move on here. I want to ask Jamie, tell me, from your point of view, you see a lot of opportunities for cash. How have you seen one of the ways this can impact somebody personally?
Yeah, I'm going to tell you kind of a little story about an alternative way that cash is king. And really, that's that cash gives you time to think. If you don't know my story, I spent 14 years in the medical device world. And that career ended about 2 years ago. And so the benefit of having cash on hand was that I had the ability to step back and take a little time to think about what I really wanted my life to look like, what I wanted to be doing, how much time I wanted to spend with my family. Passive income helped with that, but having a cash reserve and having the ability to float for a few months while I figured that out has drastically not only changed the trajectory of my life and my family's life, but I also feel that I'm able to now help change the trajectory of other people's lives as well on a massive scale. So I really was able to connect my passion to what I do every day and make a difference in this world. So that's how I think cash can be king, is that it just gives us the ability to breathe for a little bit if we ever need to make a change or want to make that change in our life.
Would you break that down a little bit further? Because I remember when Joey was leaving the mortgage industry, he had built up a number, a large amount of cash values inside of his life insurance policies. And he said that same thing. For you, though, specifically, like break that down just a little bit further, because there's somebody listening right now that is on that thinking about making a career change, thinking about doing something different. How did you actually maybe quantify how much money you have and what it was going to cost you, and whether or not you could actually make that decision, make that jump?
Yeah. So, I mean, the way I did it is, one, I just looked at worst case scenario, right? I sat down with my wife. We put all the finances, kind of made a balance sheet, a P&L, if you will, or just a personal balance sheet of kind of what we had in cash value in our life insurance, what we had cash on hand, different assets. I had started building real estate already, so had equity in properties, had some cash flow from those properties, but it wasn't covering 100% of my monthly expenses. So I knew that I needed to do something else. And so what I was easily able to do is essentially say, hey, here's our monthly expenses. Here's what's covered by passive income. Here's what we have in our cash value life insurance. And I knew personally at that given time in my life, that gave me over a year of runway. If I never made another dollar, that we would be able to survive, right? And the best benefit was, even if I used that money to live, I never gave up the future growth of that dollar. I knew I had a place to come back and refill that once we got our feet back under us, once some investments paid out, and once the windfall started to come in from my investments. So for me, it was a simple math equation. What are my monthly expenses? What's coming in from passive income? What do we need to cover that gap? And then what do we have on hand? And what is the runway we're comfortable with to kind of take the time to think about what we want life to look like and then pursue those opportunities, right?
It's so good. And without that reserve, you don't have that ability to make that decision.
Without that reserve, I would have been scrambling to find the next job, right? Probably would have continued to be in the medical sales world. Who knows? It could have been in printer sales. It would have been something, but having the reserves really gave me the time to figure out what I wanted that to be.
Yeah.
I want to piggyback what you just said, Jamie. There's a friend of mine recently who lost his job, and I don't believe he's in the same position that you were, because I talked to him, and about 60 days later, he had just gotten a call back and he accepted a job. And I asked him very simply, I said, well, is it the type of job that you were hoping for? Like that you had decided, man, this is really what I want to do. And you know what his answer was? He said, it's the kind of job that came with a paycheck. So it was perfect. And that tells me that he's not really in the position of the exact job that he would have drawn up for himself. He had to take it because he was in a bad position. And man, I hope it works out great for him. But the difference in the way you responded and the way that he responded to me could not be any further apart.
Well, I heard somebody say it this way, is that they had to go from the position of waking up to go create an income or create a fee, and to think about, how do I use my skill set to go create an income stream? And I think there's a mindset of saying, hey, from your point of view, Jamie, I was making a great income. And many of you, as you're listening to this right now, you make a great income. But what impacts that income? If you don't go to work, right? If you go on vacation, if you're sick, all of those things can impact your ability to make an income. But when we think about what skill set do we possess that we can go out and create an income stream, something that can be running, right? The idea of it making money when you sleep. You've heard that phrase before. Having mailbox money. That's having access to cash. To your point, Jamie, is just literally giving you time to think so you can say, how can I create an income stream for my skill set? And we'll talk about it in a second. Maybe we don't have a skill set and we maybe need to invest in that so we can build one as well. Ernie, cash also gives you opportunities to save money in different ways. And you recently did a webinar around this. I'd love for you to share this, especially for people who maybe have just started doing infinite banking or have been doing it for a while and didn't know some of the hacks involved in having access to cash, that how it gives you around that.
Right. And And for sure, I want to share that. But I'm listening to this and you're telling me cash is king and all these things. Man, cash is trash. Are you joking me? Russ, you're talking about the changes to the 401k in service withdrawals. Man, don't you know all the cool kids are putting their money in there? That's what real winners are doing. A little rule change, no problem. No problem. Joey, being able to qualify for a mortgage by having cash and savings, man, winners don't need that. In fact, 56% of Americans, a study found 2 months ago, said average American can't come up with $1,000 for an unexpected expense. That's what real winners are doing. That's what winning looks like. We don't need to qualify for a mortgage. We don't need to live in a house that we own. Nah, man, winners, we got less than $1,000 in cash. Jamie, man, you transitioned and had time to evaluate what you really wanted your next step to be. Nah, I resonate with that story Joey said, just finding a job and a good one that comes with a salary. That's really what winning looks like. If cash was king, I would need it. Savers are losers, man. That's ridiculous what you guys are talking about. I mean, great points, guys. But hey, if cash is king, and if you did start putting yourself in a position to acquire it, then you would be able to implement the infinite banking strategy that Joey mentioned and Jamie mentioned making use of, and you would have cash value life insurance. And if you're on that journey and we're funding those life insurance policies, you might get to a point where you've accumulated a significant value of capital or cash inside of those insurance policies. And around about year 3, when we start funding those, we start getting a vast majority, if not all, access to the dollars that we put in those contracts. All the expense, the startup costs, that's in the past. And if you have that access to a significant sum, well, then you can make a good thing better. You can go bedazzle that crown for that king, so to speak. And how you can do that, and I broke that down in that webinar, Russ, is you can take that insurance policy, and if you're putting dollars into it every single month or at multiple times per year, you can change and start funding that thing annually. And the way that you do that is you take that value that you've stored up in the insurance policy, and you can request a loan when the time comes at anniversary to pay that insurance policy. I'm not saying that you should borrow from insurance policies necessarily to start new insurance policies. What I am saying is you can use the value that's stored up there to pay annual premiums on your stuff. And the advantages that gives you is really threefold. 1 is practical and 2 are mathematical. The practical is that you now control 100% of that cash flow. There is not some organization coming into your bank account and taking money out on autopilot. That's great for bills, not necessarily for your cash flow strategy. And we're going to break that down more in a minute. The 2 mathematical advantages are if you're paying an insurance premium on any modal, whether that's quarterly, semi-annual, or monthly, you're being charged a fee to have that draft occur. And if you pay annually, you save that fee. You don't have to pay it. And the second is when we're implementing the infinite banking process, we're using life insurance policies at mutual companies that pay dividends. And when you pay the premium annually, you earn the full and greatest dividend. If you give the money over time, for example, on a monthly basis, you earn a fraction of the dividend. So if cash is king and you're building capital inside of life insurance policies, and you can take this good thing and make it better by paying annually, you both improve the efficiency of your system and you have mathematical advantages. Sounds like a good deal to me.
I think you're right. If cash is king, then what is it that we should invest in first? Because the question you may have as you're listening to this is that I don't quite know what to invest in yet. Maybe you have not taken time to understand who you are as an investor. Maybe you've not been able to meet with a coach and build out your own investor buy box to know what are the things that actually resonate with who you are and is going to specifically get you closer to the goals that you have, because your goals will be different than Joey's and Ernie's and Jamie's. And I think if cash is truly king, you will spend it and invest it in yourself because you are your greatest asset. Stallion, do you know how, if you're looking at a restaurant, and I know there's many different metrics that could probably say why a restaurant's going out of business, you start getting coupons in the mail that you've never gotten before, right? But you know, one of the greatest ways that you can see that a restaurant is going out of business?
I'm not familiar. Maybe kids eat free night or something.
I that could be one. In my opinion, restaurants are going out of business when you show up and there's only one or two waitresses in the place, right? Like you can tell they are completely underwater. They got way more tables than they can handle, and there's a line out the door waiting to get in there. And I can tell you, this place is going out of business, because what's happened is that a lot of times you go in there and there's nobody in there, meaning there's no customers, right? And so the owner just starts thinking this way: oh, I don't have enough income. I got to reduce my expenses. What's the number one expense? Labor. I got to reduce my labor expense. What's the second number one expense? Food cost. I guess they're buying cheaper food. So the food starts tasting crappy. There's not the service is crappy because they don't have enough people to do it. Those are specific things that are signs. Well, I think the same thing's true as when we're talking about how do we use cash, is that we should start investing in the thing that will produce the greatest result. We got to invest in ourselves. Like those restaurants, they should have been invested in better food and better people. They could have then created an opportunity for people to pay them more for the food they were providing. You will get provided the value you can create for the world. So when you figure out how to learn what a skill set is, just as we were saying a second ago, when you learn the skill set and you're able to wake up and say, hey, how do I go create an income that will last into the future that I don't have to trade time for, you will have the greatest result. So investing in yourself is the greatest opportunity. Selfishly, I'll give you a chance right now to go to what'swhatwallstreet.com/free call, and you can talk to one of these coaches about, hey, how do I invest in myself? How do I learn how to do all those things Russ was just talking about? All right, let's talk about for those who are business owners out there, because there's some very specific ways that we've seen business owners and investors be able to take cash and utilize it in order to create return that they would have never been able to do had they not had access to a pool of money. Stallion, give me one example.
I'll use a personal, like a private lending opportunity we got shared. Bill Allen is an investor, a friend of Wealth Without Wall Street, been on the podcast now a couple times. And he shared with us transactional lending is a really big deal in the wholesale world. And I'll break it down for you. Think about someone has found a house that they can buy for $100,000 and they can turn around and sell it for $200,000. This is simple numbers. Maybe these numbers aren't perfect, but you get the point. They can buy it for $100,000, they sell it for $200,000. But let's say the wholesaler doesn't have the $100,000 to show up at closing to buy the first A to B transaction, if you will. And so what they do is they go out and say, hey, I need transactional funding. And so someone like you can take your money and wire it to the attorney's office just long enough for the $100K to show up to fund the second transaction that will go to the C buyer. Okay, so think about it. The second buyer has their funds to get the 200 there. Your 100 just shows up long enough for like the technicality. And you can get anywhere from 6, 7. Bill even shared an opportunity where he had 10 points on a deal that was there for literally an hour or two. And that to me is opportunity, because guess what? Those type of deals don't come to somebody that says, hey, give me about 30 days and I'll get that money to you. When somebody's looking for transactional funding, it's because something has fallen through and they need money now. So when you take a loan against your insurance policy and you can get it to them within 24 to 48 hours, that is the person that's going to get opportunities that are that good.
Right. Speed kills, but also speed creates deals, right?
I like the rhyming opportunity there, Russ. It just kind of missed a little bit, to be honest.
Oh, man. It reminds me of our mentor, Nelson Nash. We talked about an example where he bought a piece of land and sold it, the guy had sold it to him on owner finance terms, and then came back and he said he underestimated his need for cash. And he came back and said, hey, if you'll pay me off for the note, I'll discount it an extra 50 cents on the dollar. And he goes, stand there real still, I'll be right back. He went and got some cash to be able to do that.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before, go to what'swhatwallstreet.com/PIOS. There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared though for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
How about for you, Jamie? Give me an example of a deal that happens when people have access to cash.
Yeah, absolutely. So I obviously do some real estate deals and seen everything from single family homes to large multifamily apartment complexes and a little bit of everything in between. And typically when you're out trying to get a loan from a bank for millions of dollars or even hundreds of thousands of dollars, the bank wants somebody's assets on the books to be able to sign for that loan. They call it a key partner. And typically the benefit of being a key partner is that you get equity in that deal, whether you invest in it or not, right? And so a lot of times the key partner is going to be an investor in the deal, but they also just bring the balance sheet. They bring the balance sheet to the bank to say, here are the assets to secure this loan. Oh, and by the way, give me a little bit more equity within this deal for being that key partner. But it takes liquid assets a lot of times to be able to be that partner. Net worth plays into this. So whether, non-liquid assets play into this, but to your point earlier, Joey, about wanting and needing reserves, a lot of times the banks wants to see reserves. They want to see liquid reserves for these big loans of, hundreds of thousands or millions of dollars. And that gives you the opportunity to earn extra return on your investment just by being a partner on that deal to sign your name on the paper at the bank.
I mean, basically what you guys have done is shared two different ways by just having cash that really, you don't have to really give up your cash to make money. Like you literally, in your example, Joey, you said he put money not in the hands of anybody who could use it and take it away from him. He put it in a escrow fund at the attorney's office.
That's right.
Only be used for that one purpose and be sent back to him. That was his only job.
And his other condition was, Russ, is that the funds for the second transaction were already there. He would not send his for the first transaction. So it was just there's no way to lose on that deal when he's quantified both sides of the transaction.
And then Jamie, your situation is saying, hey, I come in with an experienced real estate professional, people who are putting deals together, and I come in as the KP, the key partner in the thing. I put my balance sheet up. How much work is the key partner actually doing in the deal? Are they out there raising capital? Are they out there like managing the project?
Yeah. So a lot of times, I'm not going to get too in the weeds with SEC rules and regulations. They have to do something as a general partner. But a lot of times it's just putting up that balance sheet and maybe having a little bit of say in the financial outlook of the project.
All right, Aaron, give me another example that maybe even personal in nature.
Yeah. Well, again, you guys sound like losers. These deals sound terrible. Why would I ever save money to be able to do that? I'd rather stick in a place where I don't know what the rules are and what the rules will be, and I have no idea what the investment is. I have no idea why you guys would want to do what you're talking about. But for me, just an example of this is along the lines of just how I've oriented and organized and made a habit and a pattern of being a good saver between the money that I'm actively earning and the passive income that Caroline and I are bringing in, that we're storing it in insurance policies where we have access to that cash. And because we do that, we're focused on building a land investing business with a partner that we have. And last month, Caroline and I contributed some capital to that. And this month, I was just counting up my pennies in my pocket, and I realized, man, I got a little bit more cash here. And so last Thursday, I sent a little message, a little boxer, to my business partner. I was like, hey, just in case you come across any bigger deals or really good deals, let me know. We've got some we've got some capital that we're ready to roll with. And no joke, on Friday, I sent that message on Thursday. On Friday, he sent me a Voxer message back and it was like, hey, actually, these 2 wholesale deals I've just found these, and they're in areas that we've been working in already. And these are better wholesale deals than we typically see. Do you want to do this? It's going to be another $45,000. And talked with Caroline about that and sent him a message back later that afternoon, said, sounds great. Speed kills, right, Russ? It's way faster to buy wholesale than it is to go out there and acquire and just churn up some deals on your own. And these are areas that we worked in, so we feel pretty confident that we're going to be able to sell them and kind of know exactly what that's going to look like. And so I requested a loan against one of my life insurance policies on Friday. I checked Monday morning and the loan had been processed, just waiting for it to hit the bank account. And that money's going into our entity, and we're going to turn that 45 into 120 to 140 as quickly as we can. Cash is king, baby.
How many times will you do that? You know, I mean, take 45 to turn to 120, 130.
Exactly. About as quickly as I can count those pennies.
Exactly. Well, it's just so many examples that we can talk about of how access to cash can give you really opportunities. And I said it before, the cost of missing out on all these opportunities, you just add them up. It's enormous. But Joey and I were doing a deal the other day where we were actually looking at buying a business, and the guy's business had been on the decline. There'd been some situations that had happened where he had lost some of his key revenue because it was an internet-based business. And one of the things that he received a lot of money off of was his affiliate offer. And it used to be on like the top 1 or 2 on the search results for Google when people were searching for this specific thing. Well, then all of a sudden it's been losing traction on Google. So now he's on page 2 and he's not getting as much revenue. So a business that was producing like $5,000 a month for somebody who was doing very little, if anything, on the business at all, is now earning like $800 a month. And so Joey and I are able to come up to him and say, hey, you know, we're interested in this business. We think that there's some opportunity because he gets a lot of traffic on the site itself. But, you know, the revenue in this thing is really going down. It's really hard to understand if this is going to be a good fit or not. Here's what we're interested in doing. We're interested in buying the business and, you know, implementing some strategies to see if we can't get the revenue going back in the right direction where you had it on those specific 3 areas. And if we can, then we will give you, you know, a percentage of that earnout, right? So really the opportunity for us is buy it, pay cash at a limited amount right now. And then if it grows, well, then we'll pay you a percentage of that growth. Now, if it doesn't, you got the cash in hand, you know, we got a lesson learned. If it works out well, right? If it grows well past that, we only have to pay him up to the point where that was worth at today's value. And what, you know, Nelson Nash in his book, Becoming Your Own Banker, has a chapter dedicated to the golden rule. And the golden rule was those who have the gold make the rules. And here we are sitting with access to cash, and we can make decisions based upon that. And if we end up making money, whose money are we going to use to pay him back with, Joey? It's going to be his, right?
Exactly.
It's going to be the money that the business produced that would actually pay for that. So how many times can you buy a business with really putting as little as $5,000 out of your pocket? Because when you look at the opportunity, it could be much bigger, but really you should think about ways to create cash. And by having access to it, puts you in a position to make decisions like that, to even be looking at those deals. So we can start talking in the future about whether or not we're looking at big deals, right? Big deal pile or small deal pile. But I want to talk about some specific strategies of how we can actually use cash into our favor. So Joey, walk me through a specific strategy of how somebody can have more access to cash, if you will.
Well, yeah, I think it's very poignant for us to talk about if this is so important, if having access to cash and creating reserves is so important, but maybe you've never really been able to do that. I remember distinctly when Russ and I were first meeting, talking about infinite banking. In my mind, where I could start was like $2,000 a month. And that was that may sound like a lot to you, but at the time, that was a small amount of what I was earning because I had all this money going in opposite directions. It was going away from me in all these different places that I thought were good for me. But man, it was not helping me get closer to financial freedom. And so I had to implement what we now call the passive income operating system. If you're not familiar with it, you can download it for free. We have a guide. Go to wealthwithoutwallstreet.com/PIOS, the passive income operating system, where you distinctly define what are my outgoing expenses, what is my income, and you create actual accounts that this money flows through. I'm not going to maybe break it down 100% here because it's much easier to visualize in the guide, but just know you're going to have a place for your income to go, one separate account, then you're going to push down to your expense account and have your bills automated from there. And then everything else flows into your infinite banking account that you have now set up to fund your policy premiums, to invest from, and to even pay your taxes from. If you can do that, it's amazing how you can look up 6 months from now and have so much more of that income that's been captured into your system that now you can turn your active income into passive income. And again, it only happens when you're very purposeful about putting in a system that otherwise you would have spent if you didn't have it in place.
Well, the system is, I think, the value. The
100%.
Insight behind what Joey just shared there is that most of the times the reason we don't win is we have no process. We don't have a system. Well, technically we have one. It's a crappy system, right? Whatever you're doing is a system, but if it isn't working, it's a crappy one. So what do you want to do? How do you build cash? How do you stack cash? You have to do it systematically. You have to create a process. The fact is that most people don't have a system. The passive income operating system was built so that you could turn active income into passive income, but you could do it on autopilot. The reason it's on autopilot is because it's actually orchestrated ahead of time. You take the time to implement it on the front end, and then from that point forward, it works. Think about that in your life. If every single thing you could do, you could create an autopilot version of it. Like when Mark Hargucci, who's a pilot on a former pilot and a coach on our team, talked about how flying an airplane maybe for 10 hours, 20 hours, he would only work for 10 to 20 minutes of it. Why? Because the plane was working on autopilot for the rest of the time. How many of us need to work for 10 to 20 minutes on building a system that then can work on autopilot for us? What does that free you up to do? Jamie, what's a system, what's a process that people can start to automate in their lives to create this access to cash?
Yeah, Russ, there's 3 books that I like to revisit and read every single year. They're Becoming Your Own Banker by Nelson Nash, The Go-Giver, and then The Richest Man in Babylon. And The Richest Man in Babylon is a great parable about how to become the richest man in Babylon. And it comes with a very simple formula of how we use our money, how we think about our money. It's called the 10-20-70 rule is kind of what I call it. We also break this down, I think, very well in the Savers Worksheet in our Passport Challenge, which I'll give you that link in a minute. But essentially what it says is we need to be saving at minimum 10% of our income, right? Using 20% of that income to pay off bad debts, and then living off of the remaining 70%, including giving and lifestyle changes or lifestyle that we choose to spend on. And so I think that's a very simplistic way to begin this process of are we saving enough? Are we being good savers? But I think this whole process of building passive income and trying to achieve financial freedom starts with the vision of why we're doing it, right? And so that takes me back to the Passport Challenge. That challenge is all about kind of the why. I mentioned earlier when I was talking about taking time to really understand what I wanted my life to look like. That was a big thanks to the Passport Challenge for helping me with that process. By the way, this is free to go and find this at www.wealthwithoutwallstreet.com/passport. But in section 1, there's a savers worksheet that'll break down this formula for you very simplistically. Put in what you're bringing into the household every month, and then you'll be able to break it down into 10, 20, and 70% to get a framework for where you could be a target to begin saving at least that 10% of your income.
And we say we follow a right next thing grid. This is what every one of our coaching students go through. And that 10% is the minimum level, right, that they need to get out of the needs upgrade, right? To be able to get to the point where they're good in their cash value, they need to be saving a minimum of 10%. Now, to move out as good to superpower, what does it require? What percentage of our income needs to be flowing through our infinite banking system?
25%.
25%. Well, the beauty of what the 10-20-70 rule that you just shared is that for most of us, the 20% that we're paying toward debts and the 10% that we're saving, we combine, right? We run that through the passive income operating system that Joey just shared. And so now 30% of our cash flow is running through our infinite banking system. And then we're allocating it towards the things that we're either saving, investing, or as you said, paying off bad debt. And I think if you get in a process, you create this system in your life where you're following it. Hey, I'm going to live off 70%. The other 30% is going over here. How do I make that happen? I follow the passive income operating system that Joey said. Okay, now that's automated. That gets me in a position where I can start taking advantage of things. But how much do I need to have? Well, Ernie, you want to talk about savers or losers. Tell me the difference between an emergency reserve and an opportunity fund.
Yeah, well, I think it's really important as you start doing all that really good stuff in the passive income operating system and actually believing that cash is king and putting yourself in a position to have cash is to know how much fruit you need to eat and how much fruit you should keep. In the Garden of Eden, God told Adam to go and eat, enjoy, cultivate, go do all this great stuff with all the fruit of these trees. Just don't go and eat from this one. And then that same idea applies to us stacking capital, and that there's a certain amount of cash that we need to keep. There's a certain amount of cash that we're free to go and cultivate with. And that's a different amount for everyone, but for most people, that's a certain number of months of expenses for you. 3, 6, 9, 12, whatever your risk appetite and tolerance is that you and your wife agree to, whichever is greater, pick that one. That's your cash reserve. If there's any businesses that you're operating and you want to, Russ, like you broke down, make sure that you keep a restaurant from going in decline as you invest in yourself. If there's any amount of reserve that you want to keep there, add that. If you're self-employed and you're keeping tax dollars, add that, and there's your total reserve. And it's important that you know the difference between the total amount of cash that you have and the amount of cash that you're going to keep, so you know exactly how much fruit you can eat and go put that to work. Knowing that difference between reserve and opportunity is super important as you start to implement and believe the idea that cash is king.
If you've ever played the game Cash Flow, you know that there's these two piles. There's the small deal pile and the big deal pile. And to pull a big deal pile card, you have, I think the rules tell you that you need at least $5,000 in cash. Now, the reality is that you pull the big deal pile, it may require a lot more than $5,000. But that's kind of the area that you have to play in. Well, how do we play off that in life? We typically see in our world, the big deal pile is for those accredited investments, and the minimums typically are around $100,000. And so if you are following our right next thing process, you're actually seeing how much cash value do I need to have to be in the big deal pile. We would say $100,000 because that's what the minimum typically is to get in these deals. But to your point, Ernie, that I need to have more than 100,000. I need to have 100,000 in my opportunity fund. I need to have my emergency reserve built bigger. And I think when we talk about cash is king, there are ways to create opportunities, both personally and in our business. We gave you examples of those today. We talked about how to build a system, how to do it systematically so that you can actually take advantage of the big deals when those opportunities are there so you don't miss out on those. This may have been a super basic episode for some of you, but sometimes I think it's a good reminder to take us back to those things that we forget. But there's the insights and nuggets in here. I would encourage you to go back and listen to a couple of times that will hit you differently when you hear them because of timing and the specific thing that you have going on in your life. I hope you found value in this. Coaches, thank you so much for sharing those nuggets. I know you meet with so many different people on a regular basis. I'm going to encourage you again one last time. If you haven't taken the time to meet with one of these coaches and you've got questions, you want to figure out how this applies, whether it's how do I become a student? How do I really start investing in the thing that's going to create the most value, which is myself? Or, man, I need to implement this infinite banking concept. Go to what'swhatwallstreet.com/free call. Either way, you can get on a phone call with one of these coaches and figure out what the right next thing is for you to do after that call. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.